Welcome back to the Powerhouse Podcast. I'm your host, Zeb Lowe, and today we've got a conversation that I've been looking forward to for a while. Joining us is Anthony Casa, President and CEO of UMortgage, and someone who's been a fixture in the mortgage industry for over 2 decades. Anthony started as a loan officer at just 18 years old, and since then, he's built multiple successful companies, founded the Association of Independent Mortgage Experts to advocate for the broker channel, and has become one of the most outspoken voices on where this industry is heading. But what makes today's conversation especially compelling is that Anthony isn't just talking about business strategy and market trends. This is a conversation about leadership, resilience, and winning in a market that refuses to make it easy. Now, Anthony, thank you for joining me.
It's great to be here. Thanks for having me.
Of course. And need to let the audience know we're recording on, this is on MLK Day, which is, a day that most people take off. I very much appreciate you taking the time out of your day, like I said, to come and join us on a non-traditional recording day, let's say.
Absolutely. In the mortgage business, as much as it's a federal holiday, all the lenders are open. It's a work day for us.
Right, exactly. I wanted to have you on to talk about a couple of things, but first I wanted to start with the op-ed that you wrote for us. It was called The Playbook for a Rookie Loan Officer, What I'm Telling My Son Before His First Year. And it was one of my favorite contributor pieces of the last year. And I would encourage anyone in our audience that hasn't read it, take 4 or 5 minutes out of your day to do so. Because in your article, you share great advice for anyone in the industry that's looking to set themselves up for success. And you break it down in a really succinct and helpful, easy to follow way. But the premise beneath the article was very unique. You were writing it kind of in lieu of your son preparing for and going to take his NMLS exam. So unpack that for me. Why did you feel compelled to write it? What spurred all of that on?
It's such an interesting situation. See, my son just turned 21. He got licensed as an LO, 6 months ago. And, it's kind of like re-inspired me in many ways, re-energized me just about like the thing that, I fell in love with this business about originally, which is like, being a new LO and learning this business and learning how to support consumers on their path to the American dream. So as I've gone through this, I've kind of like had this thing where it's like my wheels start turning at all at any given time. And I always want to share these anecdotes or these approaches or the things that are important with my son. But then I start to realize like, man, how many people, that are coming in this industry don't have a dad that's writing them, giving them that advice or pulling them aside to coach them up on different things as they go through that first year. Because it's a 100% commission job. It's a really tough industry to break into. There's no loan officer school. So you really need a good mentor and you got to get a little lucky to make it in this business. If you ask any loan officer how they got in the business, it usually starts with something like, it's a funny story. So to me, I really want to get those things that are siloed in my conversations with him into writing and kind of build out a playbook for as we bring new loan officers in this business, which, I'm super passionate about.
It's interesting that you bring up the phrase fatherless, because in the past couple of shows, and I've talked about this for a long time in conversations like these with fellow originators, when it comes to home buyers or borrowers, where they don't, so many potential home buyers are, like I said, like they feel they may have a father, but they don't feel like adults, that they, with any sort of financial literacy, wealth planning, estate planning, they like a 2 or 3 generations of fatherless consumers out there. And I also talk a lot about in our industry. I've been at, not as long as you, but I've been in the industry for 15, 16 years. And I feel like I've seen a decline in general of professionalism amongst LOs. And that's due to a lack of, I think it's no secret, a lack of mentorship. And, you're as an LO, you're kind of in this weird space to where if you're lucky enough to get a really good mentor, that's a roll of the dice, and those are few and far between, because I guess the cliched model is that you have a branch that is run perhaps by a producing branch manager that was rewarded with becoming a branch manager because they want like a notch on their belt or something, but they're more concerned with production because they're a producing branch manager, not so much mentorship, not so much growth, not so much coaching. And so they'll recruit and promise training to LOs and promise mentorship, but they don't know the first thing about it, or they definitely don't do it. Or your alternatives to invest really heavily up front. It's an emotional investment, a monetary investment on getting a coach, a business coach or a mortgage coach. And a lot of people don't take that step until they're a couple years into industry and they're wanting to get to the next level, not right out of the gate. So that platform that you kind of set up, that playbook, I thought it was quite perfect. I'm curious though, how does that look from your son's angle? Like, he's been in the industry now for a little over a year. What's his experience like getting into it?
It's eye-opening. And everything you just said, Zeb, is 100% spot on. And while I've had a lot of new loan officers come into the business at UMortgage, this is the closest I've ever been to one. And the mentorship piece, like, you're 100% spot on. Like, the branch manager, God bless them, they're focused on their own business. And it's a really lonely place to be a new loan originator in this business, man. Like, I empathize at the highest degree after watching my son. And, I forget, because of where I'm at, I've been doing this for 22 years. I don't know, maybe I just take things for granted at this point. But man, it is so hard to build a book of business when you're not confident in the guidelines. You haven't done many transactions, so you don't know the milestones competently. Every agent in the world is going to say yes to you, but you don't even realize that a lot of them are just going to take you up on a free lunch and you're spending money on somebody that's never going to send you a deal. So, for me, going through this side by side with him, it's allowed me to understand our gaps as a company and how we support these individuals. And we've actually introduced some new trainings and some daily huddles and stuff like that. I call it sort of like systems for trust, because the truth of the matter is this, is like, when you're at this point in your career, it's not about giving them a playbook. It's not actually about teaching them the mortgage 101, because it only matters for them to know when it's applicable. So like, if, the biggest thing that they're focused on for the first couple of months is getting leads. And then once they get the leads, it's like, even though they've been a loan officer for a couple months, they don't know how to put a deal together. So now all of a sudden, like month 3, when they have some deals, they want to learn about, how to read a credit report and how to understand the 1003. Even though you might have taught that to them earlier, because it wasn't applicable, they don't remember it. They weren't actually practicing it at that point. So I think for me, it's really changed the way that I believe we need to support these individuals. And I think, there's got to be a better way. This is such a great industry, and the income potential is really, really amazing. But the mentorship piece is missing. Like, I look at financial advisors, like, I don't know if you've ever had any friends that became a financial advisor, but you'll notice, like, for their first 2 years, they're on an appointment with their boss. And it's like, they don't actually write their own business. They're literally the apprentice of that person. And then eventually, after 2 years of being under that person's umbrella, they eventually grow up and get to do business on their own. That's what we're trying to develop here at UMortgage after going through this experience with my son and also other new LOs. Is like, we got to provide a higher level of touch from a mentorship perspective, not a branch manager perspective.
It's interesting that you say that with financial advisors and CFPs. I spent several years in the reverse mortgage space, and a big initiative was to partner with CFPs and financial advisors and teach them about the equity options with reverse mortgage. And so whenever I would go to the local offices and I would see the new hires there, you're exactly right. And it's wild that you're saying it, because in my mind, like, man, I wish my first year or two as an originator could have looked a lot more like that than the reality of the situation.
Yeah, and that's what that playbook that you mentioned that people, I mean, I highly recommend any new loan officers out there to go take a look at it. Is it really just kind of outlines like what are you hoping to accomplish in that first year? Because the first year is going to go by extremely slow when you're in it, and then when you look back, you're gonna feel like it went by in a jiffy. And to me, you really just have to have clear understanding. It's like you're not going to knock it out of the park in the first year. Like there's some very basic things that if you focus on for that first year aren't going to, get you to that 6-figure mark in year one, but it'll give you the foundation where when you get to year two, you've got something to build off of. Like you have a real shot of getting to 6 figures and you have some momentum to go with. But if you don't know what those things are, a year can go by really quick and you've got no foundation. You're still looking for, consistent referral partners, or you're starting over because you picked the wrong partners. So I think it's a great learning aid for anybody in that situation.
You were brought into the industry you had a rather unique mentor yourself, didn't you?
Yeah. I got in the industry when I was 18 years old. So I'm 41 now. Just this past week, I turned 41. So I'm actually 23 years in the business now officially, which is hard to say. But my mentor, the person that got me in the business, was a guy named Mike Shad. He was an offensive lineman for the Eagles, first Canadian, first-round draft pick in the NFL. And, I was able to, sit by him in a call center, listen to him all day long, regurgitate everything I heard from him to consumers. It was a different world then. I mean, we're talking 2003, 2004. Very, very different world. But, I learned structure. I learned discipline. I learned the importance of being a mortgage advisor because he was a great one. And for the first year in the business, I was very lucky to have a good mentor. Not a lot of people get that opportunity.
One of the things that I found interesting in your article that I really appreciated is I felt like it was a mix of old school techniques, mentality, strategy with new, right? And so when you're in the playbook, you talk about posting, 3 times a day, right? One video, one picture, and one basically text or written post. But you also talk about your relationships with agents. And the advice is to work with newer agents and to work open houses, work on more affordable homes. And to me, that's what I did. That feels old school to me. What I see a lot in listening to podcasts and going to conferences or to the newer LOs, or just you go out there and you go after the top. You're your own, because there's this thing that loan originators often fall into where they kind of at the whim of the real estate agent, right? And they have to bend over backwards. But if you have a high producing agent, then you just kind of have to be their whipping boy and then subservient to them 24/7. And going after, like I said, those established high producing agents, I feel like I see quite a bit of spurring people to do that now, which is not, I'd say, like it's, I guess, more new school mentality. So how do you feel about that? Why is that the right entry strategy in your opinion, which I tend to agree with, but the walk before you run, get new agents, educate them, build those relationships from the ground up? Why do you think that's so effective?
Yeah, it's a great question. And I'll be honest with you, the people that are giving that advice that you're talking about, like this new school of going after the top agents, they haven't been a beginner for a very long time. And that's why they have this luxury. They're all the way at the top of the hill and they're telling all these other people like, hey, go after the top agents. Don't waste your time. Sounds good. But when you're a 20 some odd newbie or however old you are getting in this industry, believe me when I tell you, if you have no experience and you approach a top agent, they will undress you, they will embarrass you, and they will dismiss you very quickly. This is a tough business, man. I mean, it is tough. And I've seen it happen to my son where I'm like, hey, man, like you got to build your confidence with people that are on the same path as you. You have this unbelievable thing where you're going to grow up with a generation of real estate agents together. Like you're 21. You have a bunch of agents that you build partnerships with now. In 10 years, they're going to be top agents because their time in market is going to be unbelievable. And at that time, everybody's going to look at you as the guy that has all the top agents, but they're not going to be top agents when you got them. And I think for me, I'm taking that long-term approach where if you think it's easy to get a top agent, well, then it's going to be easy to lose a top agent. What's hard is to build a relationship, show up with that person that has no leads and go to an open house on Saturday and hope some buyers walk through, and hopefully you guys can tag team and cultivate a relationship. And then over time, you start to build that rapport, you get referrals, but there is no easy path. And as a new person, it's unrealistic for you to think you're just going to go into Redder and start calling, the top agents in your market. Those people have LOs that they've been working with for 5 to 10 years. Like there is loyalty and relationship in our business. So I think it's both the best short-term play, but I really believe it's the best long-term play if you do it right and you build those relationships and you grow with them over time.
I think that speaks, though, to what's kind of underlying this conversation when you say that there is no short-term path, but there's a path. And that's what the industry, I think, is sorely missing, is the idea that a career as an originator is a long-term path, right? With milestones that you can set every 5 and 10 years, not necessarily 5 weeks and 5 months. And what you're talking about, you're really talking about like a cohort of people, of professionals that are coming up together that, like you said, like in 10 years, that's on the track to be a lifelong relationship, lifelong business relationship. Absolutely. That is going to weather, that's going to weather far heavier storms than a top agent that you might piss off and then they delete your number.
100%. And I think if you talk to the top LOs that are out there, I think one of the commonalities that you'll have in those conversations is they'll tell you like they've been working with their top agents for a long period of time. Like they're not worried about somebody kind of swooping in and stealing that relationship. And that's because they put in the time to build that rapport. They go to each other's kids' birthday parties. They go to barbecues together. Like this is a real relationship. This isn't just a business relationship. And I think that's one of the unique things about the mortgage industry is like when you're 100% salesperson, you really bleed with your partners. You go through the thick of it a lot with them. And that's what makes it a really loyal two-way street. And I feel the same way with my referral partners. I'm the owner of a company. My referral partners are my LOs. So, when you're in it with them and you're there for them when they have bad days and they're there for you when you have bad days, it's more than just the transactions that make that relationship.
Right. I wanted to switch gears here and talk about something else that ties in your business and personal a little bit. And you shared this, you've been pretty open about it online, your sobriety journey. And you've been, I think, over a year sober, congratulations, 40 pounds lighter, completing Spartan races. And for a lot of people, that's an incredibly vulnerable thing to share. What made you decide to be so transparent about this with not just your referral network, but the entire industry?
Yeah, I honestly, for me, just for starters, I woke up and, a year ago, I was turning 40, Q4 of 2024. I was turning 40 in a couple months and I'm looking at myself in the mirror. I'm like, man, I'm 50 pounds overweight. My energy levels were way lower than they were when I was in my mid 30s. My sharpness wasn't where it needed to be. And I just was like, man, I got to make a change. And, for me, it started with, hey, I'm going to stop drinking. And then it turned into, okay, I'm going to start exercising and all these other things that really were monumental to get me to the point where I'm at today. But along the journey, what really happened is the more people I talked to about my sobriety, the more people were just like, man, it's like so inspiring, to know that, you were able to make this change. It's like, in this business, there's so much going out to dinners and, whining and dining and all that stuff. It's part of the mortgage culture, to be honest with you. And I think, there's different impacts that has, whether, I always tell people every bad decision I ever made, it stems back to drinking, whether it was when I was actively drinking or the day after I was drinking. And I think for a lot of people to know that like, hey, you can be in the mortgage business and you be successful and you can, do all the right things and not live that culture. You can have your own culture. Like when I have people coming to town, believe it or not, instead of going to dinner, we go to breakfast or we go to lunch. I'm in bed by 9 o'clock. So I tell everybody, I'm like, hey, we're going to have an early dinner tonight, and this is what we're going to do. And they can drink, and doesn't like, I'm completely supportive of anybody else. But I think being able to show people there's a different way is important. But it's not just about the business life. It's also about what does it do in your personal life too? Because, for me, one of the things is like when you stop drinking, you all of a sudden you're more present everywhere. And you're more present with your family, you're more present with your partner or your spouse or whatever that situation is. So the end all be all is it's helped me elevate as a human being, and as a result of it, it's made me a better leader here at UMortgage, and better in my life as well.
What's been the reception like from your peers in the industry? Going to the conferences. I mean, conferences half the time are thinly disguised frat parties, right? So what has been the reception like whenever you made that, you turned that corner, and you're in those rooms and in those spaces?
Yeah, it's so interesting. There's a group, there's a really large group of people that I never had relationships with before that came out of the shadows, and they're super supportive. Mm-hmm. And I've gotten so many messages and had so many exchanges with people. And that's been unbelievable. There's another group of people that I had really close relationships with, and those people all disappeared because and I don't know why. Maybe it's a weird vibe that they felt that now that I was this way, I was alienating myself from them. What I really wasn't. But I think those people kind of disappeared. So it's interesting. I think for me, going to a conference now, I would strictly go for the purpose of the quality of the conference, not for the after parties and the happy hours. And, I think that's part of the changing dynamic for me of the way I think, I would look at conferences. Is before it was all about the party. Now it's all about the quality of the content and the substance that you're going there for.
Right. Yeah. You posted something along the lines that, you can transform. You can change your life or transform your life in 1 year. And I did it. So for people that are, it's the beginning of the year, people are setting goals, they're doing, wanting to turn a corner in loss. If anyone that's listening is feeling stuck, or they're going through burnout, they're in need of an overhaul, this isn't a one size fits all advice, obviously, but where did you start? What did day one of this journey, this transformation for you? What did that look like?
Well, the first thing I would say is I read the book, The Slight Edge, and I could not, if there's only one book you're going to read that I think will help you get on this path, I think it's The Slight Edge. And I read it like 3 or 4 times in a row. It's a short read. It's a great book, but it's all about
who's the author?
You know what? That's a great question. And I actually have the book right here. Give me 1 second. It's Jeff Olson. And it's a great book. I strongly recommend it for anybody. And whether you're trying to get healthy, whether you're trying to get your business a little more dialed in, it's trying to get your marriage a little bit more dialed in, it's a great book for all those things. But really what it came down to for me is just like, not trying to, boil the ocean. I just started, I didn't try to revamp my health, lose a whole bunch of weight, drop drinking, and do all these things at one time. It just started with drinking. And I just started with a 30-day challenge to myself. That's how, it wasn't like I'm going to stop drinking forever. I think a lot of people make this mistake of trying to think of things in forever changes, and that's where they fail. So I stopped drinking for 30 days. And then after 30 days, I felt really good. I was like, let me do this for another 30 days. So I think, Jesse Itzler talks about this a lot. It's like, pick one habit that you want to change for 90 days. And then don't try to convolute it and do multiple things. Just pick one. And that's what I would say is don't have a New Year's resolutions. Have one goal that you're going after and do that for 90 days. If you get off track, okay, you had a bad day, get back on track and don't give up. But I think you just start small. I think what you'll see is if you can master one singular habit, you'll build the confidence that you can take that to another habit. So to me, it started with alcohol, then it was exercise, then it was nutrition, then it was the next thing and the next thing. And all of a sudden you look back and 12 months have gone by and you lost 50 pounds. You haven't now I'm at a point where I haven't drank. It'll be 500 days this week that I haven't drank. So it's been well over a year. And, I sleep 8 hours a night. I used to sleep like 3 hours a night. I just feel at 41, I feel better than I did at any point in the last 10 years.
Do you practice or did you practice either visualizations or positive affirmations or the writing down on a daily basis your goal or your goals until you've met them?
Yeah, absolutely. I think one of the things that I do that came from this, and a lot of James Clear talks about Atomic Habits, and the Slight Edge talks about a lot. It really is that daily reflection. So for me, I have a standard daily reflection I do every single day, and it's three parts. It's one part is what do I get done for the day, and I bullet point that out. What are my priorities for the next day? So I have clarity on the next day, what I need to get done. And I'm not writing out every single thing. I'm writing, these are, the top 5 things I got done today, the top 5 things I need to do tomorrow. And then what are my opportunities for improvement? And that's 1 or 2 things. And when I do that at the end of the day, it's very much what you're talking about. It's a little bit of journaling, it's a little bit of visualization, but it's a little bit of this clarity that happens of saying like, okay, well, what are the things that, resulted in me eating poorly, or what are the things that resulted in me being in a situation where I felt uncomfortable and I could have ended up drinking or something like that. And just once you write it down and you acknowledge it, now you know what to prevent from happening in the future, or you can author how you want it to change in the future. So that's what I do, and I think it's extremely effective.
I'm curious from a leadership perspective, like what decisions are you making differently now in light of the past year? What clarity do you have now that you feel like you didn't really have before? You touched on some of this in your previous answer, but can you expand on that from a business perspective?
Yeah, man, it's been a game changer. I mean, like for me, like I'll just give you an example. Is like you want to talk about differences. Like I wear a Whoop, and we've got 50 of our team members here at UMortgage that all have Whoop. So we're all in this little leaderboard community where we have an app, the Whoop app, where we could see who had the best strain, who had the best sleep, who had the best recovery. So we're really competitive about it. Like everybody's trying to be the best every single week. Yes, like you would think like we're a mortgage company, like maybe Anthony, why aren't you competing about how many loans you're doing or how many fundings you have? Like we do all that too. But because we've started to focus on health, it's really kind of allowed us to focus on the things that really make people more productive. And that this is where I had a blind spot for the first 20 years in this business. Is my thing was this is my only thing that mattered to me when I was talking to people was productivity, performance and productivity. It was all about that. And what I realized over this last year, as I've kind of had my own epiphany with health, is like, that's the top. If you were looking at a health pyramid, performance productivity is top of the pyramid. Everything under it is your sleep, it's your mental health, it's your nutrition, it's your relationships. Believe me, you want to know how many people that I start to ask questions to over this last year as I got on this health journey and say, hey, how's everything going at home with your spouse? If you think somebody can be productive if they got a marital situation going at home, you're absolutely crazy. So you might want to talk about the numbers, but if they got that going on in the back of their head, they're not going to be very productive. So it has opened a whole new dimension of the way that I look at people and the way that I lead as a leader. Is I start with that stuff. Hey, how's everything at home? I see, I don't sit there and tell people like, hey, I see you put on weight, but I'm saying, are you doing, are you working out? Are you sleeping well? And once you uncover that, that's when you start to realize like, if you can help people get on the right path with some of those things, the work stuff will work itself out. If they're sleeping well, believe me, you're going to get a focused person during the day. If they're working out, you're going to get somebody that's super productive on the hours that they're working. If they have healthy relationships and everything's good with their kids, they're going to be able to focus at work. So it's changed my entire leadership approach, man. And I think it's trickled down to my leaders, our leaders here, and our team members in a big way. They see I'm different. I'm way calmer than I used to be. If you were to watch a video of me when I did this, 2 years ago with Diego, I was probably jittery and all over the place. I'm way more calm than I've ever been. And I'm a lot more thoughtful about, what people go through and what really drives their performance than just, the numbers.
Yeah. Well, it's cognitive load, right? I mean, if your home life is a mess and then you're showing up at work, you're not leaving that behind, and it's burning brain calories and taking up space that doesn't need to. It doesn't have to be there. It's the same thing if you're not healthy, if you have an injury. I mean, it's just constantly kind of gnawing away at your potential.
Yes.
Right. And it's just minor obstacles that you're constantly having to overcome to get to your goal, like I said, in a professional environment that just drain you. It's like Chinese water torture, right? Just a little bit constantly at a time. How do you balance this, the idea that you're going to get a little better every day, or you're getting better every day as a philosophy? How do you balance that with recovery, like with rest and a path to sustainability?
It's a great that's kind of the word of of the year for me is sustainability. I think the way that I look at this is you first have to start by saying that if you want to be if you really want to be healthy and you want to sleep well, if you want to eat well and you want to exercise, it's going to limit your number of hours total. Okay. So because if you're doing those things, it's probably 10 hours a day just between exercise, sleeping well, and eating well. So, that's basically almost half your day is gone. So for me, what I think about is like, what are the things that I need to be great at on a daily basis? I used to try to jam my schedule. Like I would get to work at, 6 a.m. till, 7 at night, and I would have meetings all day long. That is ridiculous. Like that makes no sense. You cannot be great for that many hours in a row with no breaks, with no notes, with none of those things. So to me, it's like really getting focused on the things that matter the most. Because if you're not at a mental capacity where you can be present in other areas of your life, you're not going to be effective. So that's one part of it. The second part of it I look at from a sustainability of my personal health and my in my recoveries and whatnot, is I take a common sense approach. I take my vitamins every day. I drink 1.5 gallons of water every day. I really, like I talked to you about, is I really try not to eat after 5 o'clock at night. And for the most part, by not skipping any days, I've been able to be fully recovered and feel very, very healthy every single day. The biggest impact for me is when I skip my work days. This is one of the things that I've learned is like taking a weekend sounds good on paper. But I would come in on Monday and feel like I started over. I would have all this anxiety and stress. I feel like I built all this momentum the previous week, and I come in the next Monday and feel like I started over. So one of the things I implemented was just 1 hour of dedicated work on Saturday and Sunday morning each. I do some reflection of the week. I identify priorities for the following week. I respond to emails. No heavy lifting, but just 1 hour of dedicated work. It makes me feel like I've worked, consecutively for the whole week. And when I come in on Monday, I'm not starting over. I'm building off of the momentum from the previous, week that I kept going. So I think consistency is more important than intensity, like doing a little bit every day versus having this intensity of like, oh, I'm going to work 15 hours today and then, I'm going to take a day or two off. It's like work less hours, but work consistently, on a sustainable basis that you feel comfortable with.
I just had a conversation with Ryan Grant from NEO, and we were talking about the hunter versus gatherer. There are other articles written saying that it's hunter versus farmer, but it's a personality type. And the hunter is one that is intensely focused for short bursts of time and gets a lot of stuff done. It's very much a salesman mentality. You keep what you kill. And how many loan originators are really geared, especially top producers, are geared more as a hunter than a gatherer or a farmer. And if you want to survive in the modern world and you want your business to be able to sustain itself, you need to you embrace the aspects that make you a good salesman, that make you a good originator on the hunter perspective, on the hunter side of your personality. You lean into that, but you either hire a team or implement systems that allow you to adopt the benefits of the gatherer, of the of the farmer.
Yeah. I think, it's funny you bring this up, because I just had this conversation with one of our salespeople who's had a lot of ups and downs in their first couple of years in the business. They've actually done exceptional, but they have these ups and downs. And what I tried to explain to them is, eventually you build a business and you get to be the gatherer. Like, eventually, you get to that point, but it's a slow build, and you have to start with this. You're spending 90% of your time hunting and only 10% of your time gathering. And then as you do really good for a customer, they'll refer you another customer. As you do good for a realtor, they'll refer you another customer. And if you do that good enough over the course of a couple of years, all of a sudden you go from 90-10 hunting versus gathering to all of a sudden you get to 50 hunting, 50 gathering. But then you get to the 10-year mark in this business, and then you get a lot of times where you're like, hey, I'm just gathering because my business is so robust. I have calls coming in from my past clients referring me people. I have agents that are sending me all of their loans, and I'm just in gathering mode. And that's like the utopia of where every salesperson wants to get to at some point. But the truth is, if you aren't a disciplined hunter for a long period of time, you never get to that point. If you keep stopping and thinking like you're there before you're there, you're going to find yourself going through lots of ups and downs.
Right. I wanted to pick your mind on the broker versus retail data that you'd shared recently. You shared that the broker channel was going up, headcount was up, 12 or 13%, and retail was down, I should have it in front of 10% or something. What do you think is changing in the industry where we're seeing this shift? And do you think it's an anomaly? You think it's temporary? Or do you think this is going to be a sustained shift?
I think we're way past the point where we can challenge, where it's a debate. So I'll start with this: is the data you're referencing. HousingWire recently had an article featuring this Redder data, and Redder is a great platform for loan officer and real estate agent analytics and transactional data. And basically, they came out and said, hey, in 2025. The loan officer headcount in the broker channel grew by 12.5%. So the number of loan officers as a headcount ratio grew by 12.5%. In the retail channel, the LO headcount decreased by 11.7%. So this is a zero-sum game. There isn't like a fountain of loan officers coming into business. There's a finite number of loan officers, and they're going from one channel to the other, and it's almost one for one. What this channel is losing, this channel is gaining, almost identical. So, to me, if I go back to, 20, when I started my first mortgage brokerage, Garden State Home Loans, and that was back in 2011, the broker channel was at 7.8% market share. Today, it's at over 25% market share. So, the trend is clearly going in one direction. And I think the why behind it comes down to a lot of things. I think one of the things you hit on early in this interview, you talked about the role of mentorship and leadership. I think that has been a used bag of goods that's been sold to LOs for a long time. And I think they're at a point where they're like, well, I really don't get a lot of value out of that from retail lenders. So what they would trade for, because that's the whole reason why they go work for retail lenders, are getting mentorship and leadership. Well, if they don't find that valuable anymore, now it's like, well, I'd rather move over here to the broker channel where I don't have a branch manager, I don't have a market leader, I don't have this leadership, but my comp is twice as much. And by the way, I have lender optionality. So I can see where pricing is on a daily basis. If one lender is not, very priced very aggressively, I can go to another lender. When you work for a retail lender, whatever rate you see every day, that's what you get. There's no competition. There's no accountability. You work for one lender. So if that lender says, hey, I don't want, investment properties, we're going to price ourselves very poorly on investment properties. So we don't have an appetite for it. Well, if you're a loan officer that you're in a market that there's a lot of investment properties and that's what the agents are referring to you, you're not going to be very competitive. The thing about the wholesale channel is while, one lender might not be very aggressive at a certain, price bucket or a certain product, another lender loves that product and that's all they're doing and they'll price very aggressively. Like you mentioned that you did some reverse mortgages in the past. Well, the number one wholesale lender in the country, UWM, they don't do reverse. But guess what? We have 3 or 4 reverse lenders that we work with that love it. They provide amazing service. They're very competitive with it. They're banging down our door for more business. That's their thing. So I think what's happened is there's a accountability piece that is there where they like the ability to choose different lenders and hold the lender accountable. If they provide good service and good pricing, they can make a switch if they're not doing their job. Two, I think transparency is key. You can see what the pricing is in all these different places, and transparency is a big deal. And three, I think at this point there's a trade-off that's been made. It's like, I'm willing to trade in leadership for higher compensation. By going the broker channel, I'm going to increase my comp by 0.75%. I have no leadership. I have none of that, but I'll use my extra 0.75% to pay for a coach. That's what I'm seeing. And I don't think that trend is going to reverse anytime soon. I think it's been going on for the last 10 to 12 years very aggressively. And it's a winning model. And by the way, the number one and number two lenders in the country by a mile, UWM and Rocket, UWM is 100% wholesale. Rockets 35-40% wholesale. Like, there's something to say for that for them.
My last question would be LOs going into 2026 that are, let's say, they're trying to either decide, brokerage or retail, or perhaps should I leave retail and go the brokerage route. What advice would you share with them?
I think that the first piece of advice I would give them is, no matter what channel you operate in, there is so much business out there. It's just not easy business. It requires hard work, and you have to compete for it. So whether you're a broker or a retail loan officer, you gotta go to open houses. You gotta work the relationship. You have to earn the business. And even when you get a referral, that borrower is not going to be happy with where rates are at today. It's not like when rates are 3%, the borrowers are like, okay, sign me up, let's go. When rates are 6%, they're like, they're going to shop around. So even when you get a deal, you still have to compete for that deal, make sure you're servicing that client very well. So I think foundationally, it's like, that's number one. Now, what vehicle is better for you to serve your clients is up to you. Like, there's a lot of LOs that it's very specific to them. But I think from a mindset perspective, you have to be in a situation where, like, committed to the business. You have to understand this is a new normal. This rate environment started in 2022. We're in our 5th year of a higher rate environment. Get over it, okay? Like, stop talking about the good old days. The good old days are now almost a decade of past. So you got to embrace the market, and you have to realize this is what we're dealing with. And it's still an amazing opportunity. There's so much less competition out there from a macro perspective. And if you're just willing to make the calls and go out and work the relationships, there's business to be had. So my biggest thing would be, lean in and focus on competing and winning, the relationships that are out there and the clients that are out there.
Anthony, thank you so much. Thank you I really, really appreciate you taking the time to speak with me, and definitely need to get you on again soon.
Well, I appreciate it, man. It was great talking to you, and thanks for taking time on MLK Day to spend with me.
Yes, sir.